Happy Monday, everybody. I hope you had a great weekend. Today is July 24th, 2023, and this is your Monday Market Update. There's a lot to cover aside from just the ups and downs per day, so let's jump in, recap last week, and preview the upcoming week. It promises to be full of news. Futures were lower last Monday following Chinese eco data and worries about the new outbreak of action in the Russia-Ukraine situation. Declines were modest, and as soon as the U.S. eco data came out, futures turned positive once again. Overall, it was the Empire Manufacturing Index and the headline and the details. Headline remained positive, and that is good, and the prices index fell again. Empire's first to report in July, and it really played into the soft landing. Growth is maintained and inflation coming down. Overall, not much else on the news front, and momentum pulled the markets higher. Janet Yellen went on Bloomberg and said pretty clearly, I do not expect a recession. By the way, if in fact there is no recession, which is not the base case by most, we will need to see if the earnings decline is real or not, and valuations, as I've been talking about, may look better overall. Goldman did lower their recession projection to a 20% chance this year, but overall we have a lot to go. Even without recession, markets are 20 times 2023 earnings and 18 times 2024 earnings. I'll get into this in a bit, but there is good reason to look under the hood here. As the trading day ended on Monday, the Dow was up 0.25%, S&P was up a bit over 1/3%, and the NASDAQ was up just under 1%. Tuesday had equity markets continue to rally, more Goldilocks eco news in the U.S., and you can add some more enthusiasm for AI. Retail sales are up very slightly and less than expectations, but in the rose-colored glasses world, that was enough. We do need to keep an eye on the fact that the consumer is hitting the bottom of their savings buckets and dipping more and more into credit cards. This will be something to watch. Add in the fact that with sentiment where it is, markets even took the Canadian CPI number as positive. Bank earnings came in okay. They have to dust off the no worse than fear line. Recall that from a few earnings seasons ago. They did support the positive line with commentary on capital markets and credit quality. All 23 of the large U.S. banks that were in the stress test by the Fed did pass. All good news for a group that 3 months ago was under fire. Finally, to throw gasoline on the AI fire, you recall that when this whole thing started, I mentioned that monetization was the magic word, and if there was anyone who would do it, Microsoft did. So they rolled out the pay-to-play plan. As Microsoft moved, so did the markets. Don't forget I said that. I'll reference that again in a few minutes. The Dow was up a bit over 1%. S&P and NASDAQ both up about 0.75%. Stocks were higher from the start on Wednesday, following more overseas eco data. UK CPI was up less than expected and feeding the immaculate disinflation idea. To be sure this is clear and not just the normal market speak, let's review. Every time the Fed has brought inflation back down to the target level, it's done so by causing an economic slowdown, usually but not always causing a recession. The hope this time is that the 500 plus basis points in Fed rate hikes will bring inflation back to the target 2%. By the way, a place that BlackRock chief investment officer thinks should not be done, not to mention cannot be done without putting millions out of work. But the hope is that this time it will do so without causing an economic slowdown. This will be great, even though it's never happened. So this is what's going on. Once again, the market believing in something. Will it happen? We'll have to watch the data. As banks have started, the big wave of earnings is on its way. In fact, this week, over 160 S&P companies will be reporting. Overall, this quarter, the estimates are for a 7% year-over-year decline in earnings. It was 9% a few months ago, now 7%, probably 6% after the most recent bunch of companies. Let's see if we get that lower by the end, maybe 3 or 4% down year-over-year. If it comes in down 9% year-over-year, that would be the worst since Q2 2020. And as I teased earlier, the key here is valuation. I mentioned that the current forward PE of the S&P 500, a few keys to keep in mind. If you take out the 7 stocks, the magnificent 7, those tech giants, the valuations comes down a bunch. And as for earnings, energy is forecast to be the worst of the bunch year over year. If you take that out, the 9% down or even 7% down comes much closer to zero. So as I mentioned before, take everything with a grain of salt. There is a NASDAQ special rebalance. I'll get to that in a moment. For the day, let's go. Wednesday was down. The Dow, was up 1/3%. The S&P up 1/4%. The NASDAQ was nearly flat on the day. Stocks were headed lower. Yes, you heard that right. Lower on Thursday as Netflix and Tesla were set to pull markets down. Taiwan Semi contributed to negative vibes also. Eco data actually came in too hot. Jobless claims fell to multi-week lows. Remember, that's bad news for the Fed that's looking at the labor markets and hoping that they cool off. Philly Fed came in weak, and the prices received components spiked again. Not what the one and done group wants to hear. Earnings on the Dow side were strong. Goldman and Johnson & Johnson helped to pull the Dow into the 9th straight day of gains. The Dow was up 0.5%, the S&P down 2/3 of 1%, the NASDAQ had some profit taking, down a bit over 2%. Equity markets were mixed on Friday, as was mostly earnings in the news on the news lines. Stocks did open higher, but did not hold on for the whole day. According to FactSet, the small subset of companies that have thus far reported have come out a bit below average. 75% was surprised, and that is below the average of 77%. Beating by an average of 6.4% versus an average of 8.4%. As I mentioned, we've got a big week this week. We'll have to see how it looks this time next week. For the day, the Dow eked out a 2.5% point, not percent, but point gain to make it 10 in a row, the best since August of 2017. Now that's worth saying. Now, not since best since May, like I've been poking fun at over the last couple of weeks. S&P was nearly flat also, and the NASDAQ was down 0.25%. For the week, the S&P was up 2/3 the Dow was up 2%, the NASDAQ was down 0.5%. Yes, down 0.5% on the NASDAQ. So now, coming this week is a lot. I've alluded to this, so here it is. The NASDAQ is getting another special rebalance. This happened last in May of 2011. We've been talking about this for a while, the overweight that the Magnificent Seven stocks have in the S&P, but this is not so different in the NASDAQ. The main difference is that there is a mechanism in place in the NASDAQ 100 to do something about it. When stocks with a 4.5% weight or more represent more than 50% of the average, the rebalance comes into play, and here we are. Apple, Microsoft, Amazon, Nvidia, Meta, Tesla, and Alphabet will be the main focus of this rebalance. All will have their stake in the NASDAQ 100 cut, and the allocation rebalanced to make the influence of those slightly less. This all was set up weeks ago, accounted for a lot of the volatility last Friday, and it happened this morning on the open. The idea is to mitigate some of the risk and reduce some of the overconcentration. We'll have to see if it has any effect on the stocks or the indices. Remember, these are not only heavy weights here, they are heavy weights in the S&P and owned by virtually every ETF and mutual fund out there. We're going to see how it goes. This coming week, even after a big NASDAQ rebalance, will be full of news and action. Not only will we get the 160 plus S&P company earnings reports, but we'll also get some important eco data. And of course, even though this is the first time I've mentioned it today, the Fed meeting decision and the presser. First, the earnings side, pretty much the names that you think of when you think market moving. They're on deck this week. Microsoft, Meta, Google, Visa, Verizon, Ford, McDonald's, ExxonMobil, Procter & Gamble. These will not only make microeconomic news at the company level, but as goes some of these, goes the economy. So we'll see. Big eco data waits until Thursday with GDP, and then Friday with the PCE. Remember, that's one of the Fed's favorite inflation measures. Out on Friday. But regardless of the fact that I still hold that valuation is key, the Fed will steal the show on Wednesday as they report their decision, and Powell holds his press conference. The outcome is pretty clear, 25 basis point hike, but what will the forward guidance look like? That will tell the tale. Not to be the only central bank this week, we'll also hear from the Bank of Japan and the ECB, so watch for those. To set a tone also, when you look at those three central banks, as correlated as this world seems to be, those three areas of the world are greatly different. So there you have it. A lot going on, starting with this morning with the big rebalance and ending Friday with PCE and University of Michigan sentiment reports. As always, I'm here to explore, monitor, and report to you about this. And then in our conversations, this information and much more we're going to use to help focus on the goals, long-term and short-term. Come back on Friday for the next planning video. Still a lot to do. More than half the year is gone. So keep in touch. Call with any questions. Have a great week.